Hi everyone. In this video, I'm going to go over why I think everyone is talking about Block stock. The company's performance recently has been pretty good, but the stock price is down considerably. And so the two are not meshing, and that has a lot of investors curious and kicking the tires and asking, should I buy this stock? Is it a buy on the dip? It's not expensive, it's cheap. And so that's why I thought it would be informative to go dig deeper, try and get a good insight into why everyone is interested in block stocks. Starting with the company's most recent quarter, they delivered strong growth with gross profits rising 32% year over year. The company now has 14 revenue streams across Square and Cash App that generated 100 million or more in gross profit. That was up from just 11 a year ago. And when you've got a company that's growing gross profit by 32% year over year, you're typically not able to buy it at a reasonable valuation. But if you look at here, Block's forward price to earnings ratio is trading at a forward PE of 26.11. That's nearly the cheapest it has been according to this metric going back 15, 16 months. And with the great performance in terms of growth and gross profit, investors are really interested, and I don't blame them. I have Block stock rated as a buy. I have it rated as a buy right now. So let's keep going. So Cash App is the main growth driver for the business. It delivered 931 million in gross profit in Q1. That was up by 50% year over year, and now Cash App is more than 50% of the overall gross profit for the business. It reached 53 million monthly transacting users in March. That was an increase of 17% year over year. And the overall inflows into the Cash App totaled $61 billion. That was up 27% year over year. So Cash App is getting more people to sign up, and people are using those people that are signing up, and the existing customers are using Cash App more frequently for more reasons, putting more money in. So it's been going very well for Block overall. Their financial services products are a key driver of inflows at the Cash App, and it helped build retentive relationships with their active users, particularly in the Cash App card. So not only can you have the Cash App, but you can have a card from the Cash App. And in March, there were 20 million monthly Cash App card users. That was up 34% year over year. Moving on, Square generated 770 million of gross profit for the company. That was an increase of 16% year over year. This part of the business is not growing as quickly for Block, although it is still growing nicely at over double digits. They continue to drive growth here in software and integrated payments. Gross profit from these were up 19%. They've seen strong momentum from point of sale, including at retail, restaurant locations, and appointments. And gross profit from in person channels are growing faster than online. And that's where Square has a big established base of customers, and it's got an advantage there is in person offerings. And since consumers recently have been spending more of their time and money on in person locations, that's been good for Square in person business. They continue to grow with larger sellers, and they continue to expand globally. The third part of its business is the buy now, pay later, which generated $5.6 billion of gross merchandise value in the first quarter. That was an increase of 18% year over year. Remember, this is not revenue that the company generates, this is just gross merchandise value. How much value people uh, transacted using buy now, pay later, and then Block gets a percentage of that total, not the entire total. The losses on these receivables were 0.7% of GMV. That was an improvement year over year and quarter over quarter. I will say something about this. These losses on buy now, pay later, and personal loans, credit cards, and all credit products in the industry is extremely low right now. And it's been low ever since stimulus money started going out at the onset of the pandemic. Consumers have been experiencing robust balance sheets in their bank accounts, and that's led to better performance on loan products overall. That's not long lasting. I suspect that over the next couple of years, the default rates will return to pre pandemic levels, especially more if there's a recession in the near term. So keep an eye out for that. That's something to look out for because this is unsustainably low in terms of default rates. For the month of April, they expect gross profit growth of 24% year over year, which is a slowdown from the first quarter, and we expect that to remain relatively consistent for the second quarter. Okay, so second quarter growth is going to be lower than first quarter growth, but still solid at 24% year over year. Overall, I can understand why everyone is talking about Block stock. The company's performing well in a difficult macroeconomic environment, and the stock price is relatively inexpensive. Now, the risk is elevated because of the macroeconomic uncertainties. Losses on receivables could increase, and there could be a significant slowdown macroeconomically. Although you could argue that's already priced into the valuation here. Nevertheless, in my opinion, Block stock offers a compelling risk versus reward at these prices and lower. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.